Welcome to Analysis, a financial insight series brought to you by NYP. My name is Wai Kit, and I'll be your host for today. And for today's topic, we'll be discussing fundamental analysis on Sarin Technologies. Before we start, we would like to have a disclaimer. We, my organization and I, will not be liable to you in respect of any business losses, including, without limitation, loss of or damages to profits, income, revenue, use, production, anticipated savings, business, contracts, commercial opportunities or goodwill. All stock selections are based on our analysis and do not represent the true future earnings or losses. For the methodology, we'll be using a top-down approach fundamental analysis. So from the top-down approach fundamental analysis, we'll start with the country brief, followed by the industry update and the company summary, which would consist of quantitative and qualitative values. Today's country brief will be on Singapore, where Sarin Technologies is listed in. This PES analysis will cover four different aspects, mainly political, economic, and social and technological risk and advancements in Singapore. So the political scene in Singapore has remained fairly stable in 2018 because the current ruling party has won a large parliamentary majority at the general elections in May 2011. Currently, they hold 80 out of the 87 elected seats. The Economist Intelligence Unit expects the ruling party to remain in power throughout the forecast period. During this period, political risk will be low. On the economic side, we expect a stronger global economy during this forecast period, as continued expansion in the intra-Asian trade, which will complement resilient domestic demand. Of course, Singapore is also highly vulnerable to the weak demand in the West, and the expected real GDP of growth for 2014 is 4.2. The average economic expansion will accelerate to an average of 5% a year in 2015 to 2018. Singapore has seen an increase in social risk when the riots in the Little India district took place, one of the worst incidents of civil unrest in decades. Three more protests against policies and transparencies of the government took place when Singaporeans went to protest against regulating the internet as well as population white paper. Of course, further protests are likely as Singaporeans are more politically engaged with the government. However, this will not destabilize the current government. On the technological side, Singapore is planning to emerge as the world's first smart nation to use integrated technology to enhance infrastructure services. The government will continue to promote a knowledge-based economy where it's supported by high technology manufacturing, trade, financial services, and biomedical. This will actually give us a boost to technology companies looking to start up in Singapore. Of course, Singapore is no doubt the world's best location for doing businesses for the next 4 years, as the rankings show that Singapore has been top in the list since 2009. Singapore depends a lot on high-tech manufacturing industry, which contributes 20% of the GDP. The Economic Development Board of Singapore will also continue to offer a range of investment incentives which are focused on high-value added manufacturing. This will also give a boost to technological companies in Singapore. So today's company that we'll be discussing about is Sarin Technologies Limited. Sarin Technology actually develops and manufactures precision technology products for the processing of diamonds and gemstones. So they actually provide smart solutions for every stage of the rough diamond manufacturing process. So the company is listed with a market cap of 1.063 billion SGD and is incorporated in Israel and was listed on the SGX main board in 2005. Some of the few qualitative factors that make them stand out is which can be measured by non-financial indicators, which are technological leadership, where they are measured by the innovation in their products and services, as well as their patent pending products worldwide. No other company has ever held a larger market share or a broader portfolio of products in the rough and polished diamond industry. Of course, given the synergy between the group's rough diamond and planning systems of their new products and services, they have definite indications they have not only managed to retain a dominating market share in 2013 but actually have increased in all the markets, converting users of non-Saren systems to their Saren system. Of course, during the year in review, they have announced and released new products and enhancement for existing products across all product lines. Of course, this was favorably received in the market and they plan to continue to use this strategy in 2014 and beyond, with the emphasis of their continued dominance in the rough diamond industry. Of course, their brand strength has also allowed them to command premium prices for products in a competitive market. Their brand strength has allowed them to leverage on their distribution channel to market and sell complementary products to their existing customers, as well as to seek out new ones. They believe that their brand will strengthen during the year in review and will continue strengthening the brand in commercialization of their accurate new product, which will bring brand to the attention of the consumer. So of course, for the qualitative factors, the management of the company is also taken into consideration. For example, the management of this Siren technology are skilled and qualified in the gemstone, electronics and finance industry. For example, the chairman, Mr. Daniel Benjamin, has nearly 40 years of experience in the electronics sector. Mr. Arvid Eshet, 40 years of gemstone experience, and Mr. Chan Kam-loon, 15 years of financial experience. This actually creates an all-rounded company. Of course, we also look at other quantitative factors such as revenue by geographic segment. Because for Siren Technologies, 77% of the sales come from India. So if anything were to happen to the Indian market, Siren Technologies will be greatly affected. Of course, that's not all. When conducting fundamental analysis, we also have to look at the financial highlights of the company. For example, Siren Technologies have accumulated a good revenue growth over the years, almost tripling in 5 years. They also have a good gross profit and net profit. Of course, this has also seen an increased profit margin over the years from about 58.4% in 2009 to 71.5%. And of course, the net profit margin has also increased from 7.1% in 2009 to a whopping 34.7%. Of course, the share price performance has also shown that Siren Technologies, if you have invested in Siren Technologies for the past year, you would have seen a whoppingly 90.5% return. So in quantitative analysis, you might also want to look at some very important ratios such as the valuation ratio, a price to book value, which actually shows you how much more the market is willing to pay on top of its liquidation price, which is its book value. So as you can see, it has evolved into one of the more stable stocks, which even in 2014, people are willing to pay 10 times for the stock. And of course, profitability ratios, its profit margin has no doubt consistently increased over the years, making it a very great company to invest in. Now, of course, because this is a manufacturing company, so most of its assets are mostly plant, property, and equipment. So a return on assets would be which actually shows an indication on how well the assets are being utilized in the company. For example, the assets were giving up to a 30% return every year. And also a quick ratio would also show the current financial health of the company, which means the company has actually almost three times more current assets than current liability. As you can see, the Siren SP price versus the benchmark, which is the FSSTI, Siren SP price has outperformed the benchmark by nearly 2.5 times, making it a really good stock to invest in. So we'll be comparing the price earning across Siren Technologies competitors or similar companies. So as you can see, Siren Technologies is below the mean average for price earnings ratio, but however, Siren Technologies is one of the more specialized companies focusing on diamonds, especially with their strong leadership in the diamond industry. They actually are less likely to be affected by the other market industries. As you can see, there are also other like electronic manufacturing industries. These industries are highly reliant on consumer sales as well as sales of other companies. So if, for example, if all these electronic sales are common businesses compared to niche businesses like diamonds. So as you can see, the forecast for 2014 and 15, Siren Technologies is expected to outperform the mean. So it's time to begin our evaluation. Right now, we have actually listed out the factors to consider for fundamental analysis, and right now, we're actually evaluating every of the criteria based on the chart. So as you can see, country risk, we have actually met the country as because of the low pest and risk assessment that we have conducted just now. And of course, the industry also has met the criteria as because of the high growth in the technological sector. And of course, financial analysis wise, the company has actually showed high with profits tripling within 5 years. And of course, with a high ISCR, the ability to service the interest rates for their debts. And of course, experienced management staff with cutting edge technology actually puts them in a niche, puts them above others in qualitative analysis. Further, in quantitative analysis, they actually have top market share in the niche market for diamond equipment. This is actually all the better companies to invest in if you are looking for. And of course, they have actually outperformed the FSSTI benchmark and expected to outperform the other peers in 14 to 16. Our recommendation is to invest today in this company and not to miss out the opportunity to make good money. So thank you so much for your time for listening to our NYP analysis talk, and we will see you again next time.